Yo, alright, so today will be episode one of, for now, I'm gonna call it KIZU Basics. But today we're gonna go into getting your first step into the door. That's what I'm gonna say, right? How do you get into trading? Now, I will make a separate video outside of the KIZU Basics series that goes into depth of how I would restart over completely, which are going down in the platforms, finding a strategy, finding creators in the content of in the trading space that I would watch to learn from or just watch for entertainment. All of that will be in another video of how I'd restart over. But today we're just gonna get into the basics about trading, help you get your first step into the doorway. And we're gonna talk about the platforms that you would use, just the platforms you would use. And then I'm gonna show you the platform. I'm gonna show you TradingView, how to log in. Oh, there's my dog. What's up, Dino? What's up, man? Oh, come here. Oh, don't fall off. All right. Anyways, yeah, I'm gonna show you the TradingView, how to sign up and everything. Talk about what plans they have and what you should really buy, what's worth your money as well. And then we're also gonna go into the first topic, Candlesticks. Candlesticks is like so basic, so simple, but you gotta know it. Like, there's no way you just hop onto the charts to watch the stock market or whatever and you don't even know what candlesticks are. You have to know what those are. So that's the first topic that we're gonna go over in KIZU Basics. Now, in the future, or if I make another series that's more of an advanced series, I'll go further into depth, but I'm gonna keep it simple so you don't get complicated. Because like if it's really complicated, you might get deterred away from even wanting to try it. But let's just hop right into it. All right, KIZU Basics, episode 1. Now, if you're watching this, you have to at least do the first step. You can't click on this video and then not get your step, like get your first foot in the door, because trading can change your life. I'm telling you. Like, if you just start, it's all about just starting. Once you start, especially for me, I know I felt that way. Some of my other friends that trade felt that way. When you start and you really see the potential, there's no going back. You can't go to trading back to your normal life because you just know what's on the other side. Like, the other side is greener. It really is greener. All right. Let's move on. Slides, platforms. So I use TradingView for my charting. I use TradingView when I first ever started trading for paper trading as well. And excuse me, there is an option to use TradingView for your executions. You can just connect your brokerage account to TradingView, and then you can put in your orders on TradingView, and they'll go to your brokerage account, and they'll still trade. But for my workflow, I like using NinjaTrader / Tradevit. They're partners together. I use NinjaTrader to put my executions on there. I used to use it as charting, but I really like TradingView's interface, so I use TradingView only for charting, and then NinjaTrader for my executions. And I do so because I just think NinjaTrader is faster. There's less room for error since it's not like a third party that's being connected. I'm trading right on the platform. And yeah, so I would download TradingView first. Most definitely, you can download it, or you can use it on the web browser. And I'm gonna show you that actually. So let's get you over there. So this is on my internet browser, and if you just go to tradingview.com, this is what it's gonna look like when you have nothing. Like, when you're not logged in, no account or anything. You just want to click over to the top right. So yeah, if we look at the top right, there is a get started button, and this is just what you're gonna click on. Click on get started. It's gonna show you the plans. Please make sure that you are on the monthly and not annually, because you don't want to get taxed for like $100 by accident or whatever. So it's gonna be $15 a month. You will get a month free, which is perfect because you're only going to be trading for I'd recommend a month to 2 months of paper trading and being consistent with it and sticking to whatever strategy you find. So 2 months, 1 to 2 months. So you're really only going to be paying around $15 to $30 if you stay for 3 months for this account. Okay, so you're really only going to be paying like $15 to $30 for these accounts. Really bright. Oh my god. Alright, bro. You want to say hi? Come here. This is my dog, Dina. Hey. Alright, so once again, like I was trying to say, you're really only going to spend like $15 to $30 on this account, on the plan, unless you further want to continue using TradingView for charting like how I am. You'll continue to use do the $15 per month so you can stay with the real-time data, because on top of this $15 a month, there will be a data subscription for CME Group. Now that's going to give you data to the assets that you will mainly be trading if you like kind of trade like me or around me, or just any other people in the day trading for futures. We all trade like NQ or ES, mainly gold. NQ or ES, that is going to be the CME Group. And so I think if you click on this, okay, no. But all right, whenever you do click on the subscription, it'll take you to a checkout screen, and you'll see the CME Group, and you want to do that for your real-time data, so you have that option for NQ and ES to look at it in real time, because you do not want to be on any type of delay data, right? And so you can either download the app as well for TradingView, which is what I did. I downloaded the app, or you can use it on the web browser. But we're gonna open up TradingView really quick so you can see what it looks like. All right, so back on TradingView. As of right now, this is my chart. So it's of course not gonna look like this the first time you open it up. You'd want to come over and look at this area that is on the top right, or this is the right side of your screen. Most likely there will be a watch list that you have by default, and you want to just look up either MNQ like I have here, which is micro, E-mini, micro, NASDAQ, and that's the asset that I mainly trade. Then there's ES or MES, micro, S&P 500, which is I just look at it for any mismatching, because these two pairs, this is a pair, so they're supposed to move similarly, so I look for mismatches sometimes on the chart. And then here's gold, but I don't trade gold. Yeah, so definitely click this plus sign to add to your watch list, and definitely look up under the futures section, look up MNQ and MES, or MNQ or MES, like that. And then you can click on it and add it, and it also shows you the group that it's a part of, which is CME, which is the data you would want to buy to get the real-time data. And as you see with this green dot up here on the screen, that's how you know I have real-time data. Otherwise there will be a red symbol here telling you that the market is delayed, or you have delayed data. And you will probably have red and green candlesticks, green being price going up, or red being price going down. And I just customize my chart colors. You can just do that by right clicking on the chart and opening up your settings and going to the canvas, and then clicking symbol, and then changing the body, borders, and the wicks. But we can get into all that in the future. But if you get this far as a TradingView, just change out your body colors. The left side right here where it's white for me, it will be green. You can change it whatever color you want. This right side is going price going down. It will be default by red, and it'll be red by default. But I have mine to black. You can change to whatever color you want to. Under symbol, under the settings, when you right click on the chart. And then you can also go to your canvas and get rid of any the grid lines, and you can take off the watermark or two, because usually there's a watermark that plays, but I have it only in replay mode. You can get rid of that as well. And they can also change your crosshair color, which your crosshair is the black line where my cursor is going left and right, up and down. All right, so now that you have just the basic understanding, you see what TradingView looks like open in the desktop app, and you know green is going up and red is going down. Let's get back to the slides. All right, so that was TradingView, and I could show you NinjaTrader. Let's just open up. I'll show you NinjaTrader real quick. All right, so this is NinjaTrader. Well, this right side on the bottom is a part of NinjaTrader, and this is just my account balance for my two funded here at the bottom. And then let me bring you to my left monitor. This is the actual NinjaTrader app with the charting and stuff, and it's not gonna look like this the first time you open it up, but I wouldn't even worry about downloading like NinjaTrader yet, unless you just really wanted to get the app already. This is what it looks like. You know, buying and selling orders on the left, the close button for closing your positions, ATM strategy. But if I do make a video on NinjaTrader, that'll be something we can talk about in the future if y'all want to see that. But let me just go ahead and close this. Alright, so that is NinjaTrader. Alright, back to the slides. Candlesticks. The main topic of the video, finally on it. So, obviously, by default, your candle colors are red and green. So with that being said, green being prices going up, red being prices coming down. So just keeping it really simple, bullish is a term used commonly in the stock market or any financial. By the way, none of this is financial advice. All right, back to it. Bullish is a term for when price is going up. Bearish is a term for when price is going down. So red candles are bearish candles, price going down. Bullish candles are green candles going up, price going up. So with that being said, the way that they are formed on the charts is on bullish candles, as we see this rectangle body, this is the body of a candlestick basically. And when it's green, at the bottom of the body is where that candle specifically opened up. Like when that new candlestick in whatever time frame you're on, whether you're on the 1 minute, 5 minute, or 15 minute, which all that is all about the time frames. If you're on the 1 minute, every 1 minute there's a new candle that forms. On a 5 minute, every 5 minutes is a new candlestick. Every 15 minutes is a new candle. Every hour there's a new candle. So with that being said, whenever a new candlestick opens on a bullish candle, at the bottom of the body is where it opened at as that new candlestick first formed. That's where it all opened at. And then look at the top of the body, that is where the candlestick closed. When that, let's say we're on the 1 minute, it opened down here at the bottom, we came up here to the top of the body, and after that 1 minute was over, the candle closed and then the next one formed. And then these little skinny black bars at the bottom and top of the candles, those are called wicks. A wick is where price went during that time of whatever time frame you're on. Just keep it at the 1 minute. And during that 1 minute, price went up here, but it never closed. The price didn't close up there. It went up there during that 1 minute, but it closed down here. So that's what a wick is. Same for the bottom portion. This is the bottom tick or the bottom wick, and price went down here, but we never closed there. So let's just say we opened down here. Let's say we went down first, so we formed that wick, and then we went all the way up, and then we formed this wick because then we came back down in price and closed right here. So that basically sums up what the body is, what the wicks on the body mean, and how we can go about it. So yeah, just opens at the bottom on a bullish candle, closes at the top of the body on a bullish candle, and the wicks are just where price went. Now in a bearish candle, it's literally just the opposite. The wicks mean the same thing. Price went to that area at some point, but it never opened or closed in that area. So on a bearish candle, price opens at the top. And then at the bottom of that body, price closed at the bottom of that body because price was going down. So open at the top and it closed at the bottom. And then once again with the wicks, that's just where price was. So we opened here, we went up first, but then they come all the way down, we come back up, and we close here. So just the wicks are just where price went. Now if we want to actually go look at this on the chart, we can see Asia session, or not Tokyo, Australia session opened up. So the futures market opened back up right now, but Asia is in another hour and a half. But if we're looking at this in real time, right, we see these candlesticks forming. We see price, this bullish candle right here, we're on the 1 minute time frame. This bullish candle opened up at $29,786.75. And we see also this tiny wick below here. Price went here at one point. And it came all the way down to $29,786. And we see with this top wick, as it's moving, we reached all the way up to $29,796.75. But we came back down in price as that candlestick was forming. And it officially closed at $29,793. And then we see our next candle forming. And we're just going to see how that plays out. Hopefully we can get a bearish candle just so I can show you how when this candle closed, this one opened right here. So price opened right here. So if it goes down below where it opened at, then it's going to be bearish, which is why it's turning black right now for me, which it will be red for you by default. And then once again, we went up first. So it was a bullish candle at first and we reached all up here, but then we went right back down, making it bearish because we're going below where we opened. Then we got 10 seconds left on this candle. As we see, we have a bottom wick right here because price went down there, but we will see where it officially closes at. And boom. All right, so we have that very tiny wick. We know price went down there, but it really closed up here. So that's what made a bearish candle. We opened up at the top here and we closed at the bottom here. So that's like the basics of candlesticks. You learned about what the wicks are, what the bodies are, what makes it bullish, what makes it bearish. So now you know the basic understandings and like the anatomy of a candlestick, right? So going further in the depth, candlesticks make our trends. Candlesticks are our price. It's very important that you know the anatomy of candlesticks because everything revolves around the candlesticks, obviously, because it's the one thing we're looking at, right? So let's go back in time. We see a closing like PM session of the New York stock market, right? We're going down. All right. And we start up here and we see our candles are just going down. And we went right back up. And we came all the way back down. Right. All right, so you see in this pattern, we were going down, we went up, down, once again, we went right back up, and then right back down, right back up, down. All right, so basically in a sense, as you can see what I'm getting at, we're in a downtrend, and we know this because of just by looking at the candlesticks. Where are the candlesticks going? You don't judge the market based on one candle, but you judge it based on what have all the previous candles been doing. So, obviously, we're in a downtrend. Sellers are in control. The market makers, we want this, we want prices to go down. So we go down, we come back up, we come down, and we get a candle closure below this low, right? So we see price came down here on this candle all the way down here with this long wick. All right. And then with this candle over here, we close below it. Now what we call that is a break of structure, or a BOS. And a break of structure, in simple terms, that's just the trend being confirmed in a sense. Like, we're on a downtrend, so when we have a break of structure, that just means we're continuing the downtrend. And once again, we come over here, we break this low with this candle, another break of structure. So candlesticks, we use it to see where price is at, and we use it to identify if trends are happening. Just by looking at candlesticks. You know, if we come over here, what are we doing over here? We go up. We go down. That's something. Alright, then we go up, and we go down, go up. And you see every time while we're in this pattern, we're going up and down, we're making new highs, we're making higher highs and higher lows. That's another important thing about market structure. When we're in an uptrend, we make higher highs, higher lows. When we're in a downtrend, we make lower highs and lower lows. You know, if I get my circle tool out here, all right, you see this low right here, bam. Okay, we see that low, we see this high, we see this low, higher, it's a higher low than this low right here, right? And then we come up here, boom, we just made a new high, higher high. And then guess what? We came down again, boom. Now we have a higher low than this low right here. So we're on an uptrend, and these candlesticks are just going up. We see the candlesticks are mainly bullish in this uptrend. Because, I mean, how else is the trend going to go if the candles aren't bullish? Like, they got to be bullish candles if we're in an uptrend. And then this is just basic market structure here. We're in an uptrend, we're going up. We want to make higher highs, higher lows. Higher high, higher low. So that's how you know what type of trend we're in. And you can even look at that on a higher time frame, right? Let's see. Okay, we can look at this. All right, so we're in a downtrend, right? Boom, we got our first high, we got a low, another high, got another low, got another high, got another low. Now what can we notice about this? Every low that we've had, when we've had a break of structure, every time, every candle has closed below the previous low. And the way that I know that these are lows I should be looking at as well is because they're called swing highs and swing lows. And all that is basically is just when there is a bullish candle after a bearish candle, or a bearish candle after a bullish candle. Right? So if we look at these examples that I'm getting at right here, right? What happened at this high? There was a bearish candle right after a bullish candle. That changed where the market was going. So that's how I know this was a swing high. And here, bullish candle right after a bearish candle, and we started going up. So I know this is where the next swing high will be because this was a swing low. Right here, bearish candle right after a bullish candle, and we started going down. And then once again, we had this break of structure right here, confirming the downtrend that we're in. So if we look at it, high, swing low, lower high, lower low, lower high, lower low. And we keep getting these breaks of structure to the downside. So that's how we know we're in a downtrend. Where as long as we keep getting candle closures below previous swing lows in a downtrend, we're breaking structure, we're continuing the downtrend, we're making lower lows and lower highs. And then like I showed you in the other example, opposite of an uptrend. We make higher lows and we make higher highs, and we're breaking structures to the upside, getting candle closures above previous swing highs. And I'll just show you with candlesticks. Boom, boom, boom. This. We got our swing high. We got our swing low. Swing high. Swing low. And as you see, break of structure. This would have been a candle closure above this swing high. And this again, we went on and made another high up here somewhere. It would have made another high. So that would have been another break of structure. Making higher lows, low, low, higher than the previous one. Making higher highs. And then we go on a downtrend. Bam. Okay. Low, high, low, high. We're making lower lows, and we're making lower highs, and we're breaking structure to the downside. So that's how you know we're in a downtrend. And you can see it here. Boom. High, low, lower high, lower low. Uptrend. Low, high, higher low, higher high, higher low. And all this revolves around candlesticks, just where the bodies are closing at, where the wicks are going, and all that. Because let's just say, let me see if I can find an example. Let's say we're on a downtrend, right? And let's say this never continued going down. Let's say we got a wick that came down here and went below this low right here. If it just wicked below and there was never a body closure, that is not a break of structure. And that is another topic we'll speak on later, something called a liquidity sweep. So we need body closures below previous swing highs or swing lows for it to be a break of structure. So that's why it's important to know the anatomy of a candlestick, because you have to know if it's a body closure or if it's just the area price went. Because if it's not a body closure, we're probably not continuing the trend. So I hope that kind of concludes episode 1. So you know basic market structure, you know what the uptrend is, you know what the downtrend is, you know what wicks are, you know where bullish candles are open at, you know where they close at, you know where bearish candles open, you know where bearish candles close at, and you know what breaker structure is, like on a trend. And that kind of just sums up what you need to know for this first episode. Okay, so that concludes this episode of KIZU Basics. You should know the anatomy of a candle, what makes a bullish candle bullish, where it opens, where it closes. Same thing for a bearish candle, where a bearish candle opens, where it closes. You should know what bullish means, know what bearish means. You know about market structure, like what makes an uptrend, what makes a downtrend, with the swing highs and the swing lows, and a breaker structure showing that a trend is continuing. So I think this is just a good episode to just start off with, you know, basics, market structure, and candles. And then the platforms to start out on, just TradingView, subscribe, get the essential plan, and then get the CME group trading. And that's just what you need to know. So, hey, I'm happy with that first episode, man. If you enjoyed, if you made it this long and you did some learning, like real learning about this, then props to you for staying. And please subscribe for more content. Like, if you really want to be on this journey too, subscribe. You're gonna do a lot of learning. I never thought I would even be teaching this stuff, but I just had a lot of people asking me, so I might as well just do a video channel, like start a YouTube channel, have them watch these videos instead of me trying to teach everybody individually. This would be a lot easier, and I get to record my journey too. Cause I blew so many accounts in the past, bro. And I'm doing my own learning as well, and I'm getting better every day. So if I can just help y'all learn as I'm learning too, because I'm a year in, so I'm pretty comfortable with my strategy and what I trade, and I have decent knowledge of what the market does. So if I can just help y'all get started, help y'all find the passion for it, and that's all I can ask for. So, bro, let's get to this motherfucking bag, bro. Come on, hey, just like, subscribe, share this video, everybody. Like, I just want people to join the journey. Like, I gotta do vlogs. Like, once I get back down to Miami, doing vlogs. You just continue trading, post my trade recaps, and just leave down in the comments what do you really like want to see next. Like, you want to see vlogs, more like episodes on KIZU Basics, just more learning, or continue trade recaps, live sessions, not live, but me recording my sessions so you could see how I go about my day and what my thought process is. But hey, peace.